Welcome to the Industry Experts Panel at PortfolioWealthGlobal.com. My name is Michelle Holliday. Today, we are welcoming back to the show Mr. Dave Kranzler of Investment Research Dynamics. Dave is a financial expert and the editor of the Mining Stock Journal. He runs a precious metals and mining stock investment fund out of Denver, Colorado. Dave is an expert in the natural resource markets and precious metals, and it's so great to have him here today to get his outlook for 2021. Dave, welcome back to the show. How are you today?
Doing great, Michelle. Thanks for having me back on. Expert might be a bit of an exaggeration, but I do the best I can with the tools I was given.
Right. He knows lots of stuff. Let's just put it that way. So let's start off, Dave, with something I find very interesting, and that's the ratio between silver and gold. There's been a lot of very excited talk about whether silver will begin to move closer to a parity with gold. Some people even say 1-to-1 by the end of the decade. But I want to get your thoughts about the ratio between silver and gold. Also talk to us about the equation that determines the ratio for precious metals.
Yeah, that's actually a fascinating topic. Trying to project out to the end of the decade, there's a lot I think that's going to happen between then and now, and I have a feeling that the landscape is going to look a lot different in 9 years than it looks right now. And probably a lot of people won't be happy about the way it looks then, but that's for another conversation. So the gold silver ratio probably, to my knowledge, it's kind of ranged from as low as 8, which is where it was fixed back during, part of the Roman Empire. And it's been as high, I've seen it as high as, recently it was last, 18 months or so, whatever. It was as high as like 138. So, and there's not really any kind of exact formula for what determines the gold silver ratio other than, what you can observe in the market. However, for a time it was set at, I think it was 9-to-1 or 8, maybe 8-to-1 back during the Roman Empire. And that was based on so that was back when the Roman Empire was purely, the monetary system was purely based on gold and silver. They started diluting down gold and silver coins at a point when the empire started collapsing. But originally, they were mining 8 ounces of silver for every ounce of gold, and that's what determined the ratio. So that the value you could interchange. It was the ratio which basically equated the value of gold and silver, right? So, and actually, I haven't looked at the numbers in quite some time, just because at this point it's not that relevant, but I think right now there's about 10 ounces of silver mined for every ounce of gold. And that may have changed in the last couple of years because a lot of the mines, the big silver mines in Mexico, the active ones, are getting mined out. And there's been I think there's been an increase, especially with the rise in the price, for not an increase in gold output, but maybe an increase relative to the output of silver. So, in terms of, the gold silver ratio right now is 72. And, I would say that it's going to go, assuming that the current bull cycle that we're in the precious metals continues, and I think it will, but who knows? We should see the gold silver ratio continue to decline. It came down from 138 or 140 very quickly. Recently it's been, it might have gotten a little bit below 70 temporarily a few months ago. In the last bull cycle, which peaked in 2011, the ratio was as low as like 31 or 32 or something like that. So before this bull cycle is over, if indeed it continues, I think we'll see at least a gold silver ratio down to 30 and possibly lower. And, who knows? if the I think where we would see a gold, like, I don't know, say over the last several hundred years, it's kind of been anywhere from 12 to, the recent high. So I think if we were to see a gold silver ratio that low, it would be at a time when gold and silver are reintegrated into the global monetary system, which they partially are, since banks hold gold as an asset. But I think they would have to sort of fix the price of gold to some sort of currency, and then also probably revalue upward the price of silver and fix that at some type of ratio versus gold. And I think it would be considerably lower than where we are now, and probably lower than 30 is my guess. But who knows? That's just, speculation on what it might look like and how it might happen.
Right. This is so fascinating. It's so interesting that it was actually based on the numbers coming out of the ground.
Yeah.
At the 8-to-1, you know what I mean? And now it's apparently based on nothing. If it's 1-to-137, now 170 or something like that. But not so long ago, it was hugely disparate.
Yeah. So I think actually a more interesting question is, from time to time, at least in the history of this country, there's been periods when, well, for a long time, the Dow gold ratio was basically 1-to-1. The price of an ounce of gold was about the same as the value of the Dow. So, and that happened that actually happened in 1929, and it happened in, I believe it was down to 1-to-1 or pretty close to it in 1980. So, to me, that's an interesting question: is, are we going to see a 1-to-1 Dow gold ratio again?
Yeah. People have no idea the fascinating history of gold and silver. Honestly, all history is fascinating, political history, wars, everything. But I want to turn back to something that you mentioned. I know everybody's sort of like, hey, Michelle, don't go past that one. And that's the gold standard. The possibility of our dollar actually being backed by precious metals, meaning gold. And Dave, would that also include being backed by silver too? And what would that do to the price? And what would that do to the possibility of private ownership? Will that affect us? If the dollar is backed by gold, will private citizens still be able to own gold?
I mean, I would assume so. I would think that, I mean, if you're going to back a currency with gold and silver, it would mean that you're indifferent between holding the paper currency or the metal. And so, I mean, the way it worked up until, I think it was 1934, when FDR outlawed private ownership of gold, is you would have the paper that was issued was actually gold and silver certificates. And silver certificates were around, I believe, until 1964. Well, they're still around, but you could exchange the silver certificate at the bank for silver, or you could exchange your gold certificate or your currency backed by gold. You could take it to, I don't know if you had to go to a Federal Reserve Bank, or you could do it at a local bank and exchange it for gold. So, I mean, with modern technology, as long as there's independent verification of the amount of gold that each country's central bank owns, I could see where we'll have a digital currency that'll be backed with gold and silver. And I don't know to what extent it would be convertible, but, I can only go by what historically happened. And historically, yeah, gold or dollars were convertible for gold and silver. So, and I think silver would be involved just because that's the way. I think it was the third iteration of the U.S. central bank back in the 1800s or whatever, early 1800s. And I think it was actually set up in the Constitution that silver was an official currency of the United States. So it'll be interesting to see how it unfolds. I think we are kind of headed in that direction. I know in some countries like China, you can actually go into banks and purchase gold.
It's very interesting. We have to change. Our fiat currency. We've actually, we've burned it. It's
Yeah.
it's out the door. But it's a very interesting future concept that we have. Now, you touched on cryptos, and you know what? You said something a few weeks ago that really I found very interesting. You said that owning Tesla stock right now is almost the same thing as owning Bitcoin. But you didn't really elaborate on your thought process. Is that bad? Is that good? I'm assuming it's not so great because I know your but I'd rather you go into that a little bit for everybody. What are your thoughts?
I've been meaning to post the write up on my blog. I just haven't gotten around to it. But I also publish Short Sellers Journal, which is a weekly, obviously short sellers newsletter. And the title of the issue is the January 10th issue, Electric, Digital, and Dutch Tulips. And I mean, I don't want to get into a debate about the legitimacy of Bitcoin, but certainly the price run up resembles the price run up of Tesla, which resembles the price run up of the Dutch tulip bulb mania back in the 1600s. I mean, if you look at the charts, they're identical. And we saw, well, I mean, Tesla ran up and then it crashed in March 2020. I mean, on a split adjusted basis or reverse split adjusted basis, it was down to 38. So, and now it's at what, 888 or whatever. So it's had an even bigger parabolic run up. And same thing with Bitcoin. I mean, it ran up in parabolic fashion into the end of 2017 and it peaked at 20,000 and it eventually traded back down under 4,000. It might have been under 3,000 briefly. So, and I just think that we're going to see that phenomenon happen again. I think both Bitcoin and Tesla stock, as well as a number of other stocks, obviously game stocks, the stock du jour, but I think we're going to see all of these come crashing back to earth at some point.
There's a lot of different sectors that have just really gone crazy, and it doesn't seem for a viable reason. Do you know what I mean? You can't look and find the reason other than equate it to outside sources, which brings me to another question. When it comes to the prices of gold and silver, does it really matter politics or the pandemic or anything that's going on outside of it, or is it all interrelated? For instance, Janet Yellen was just put into the position of the United States Secretary of the Treasury. Will that affect precious metals, in your opinion?
I mean, the expectation is that there's going to be a lot more money printing coming from the Fed. There will have to be in order to support all of the government bond issuance that's coming. That'll be needed to finance all these programs that they're talking about rolling out. So if you're talking about, let's just say the Treasury has to issue a couple trillion in treasuries this year, and I think it's going to be a lot more than that, just to fund, the next stimulus program that they're talking about. Unless the Fed is willing to let interest rates rise quite a bit as those bonds get issued, the Fed's going to have to buy a major portion of those issues, and it's basically what it has been doing. I mean, even though it's not in the media right in front of your face, the way their big money drop was in March and April, 120 billion a month, and they're buying treasuries and mortgages still. So, and that's what's helping to hold down interest rates. So to the extent, I mean, I really am disappointed that the government was, that Yellen was allowed to be appointed Secretary of Treasury, because it basically, there's supposed to be separation and independence of the government and the Fed. And obviously there hasn't been for quite some time, but this basically kind of merges the Treasury Department with the Fed. I mean, they're one and the same now, as far as I'm concerned. And anyone who thinks that that's not the case is naive about how things happen behind the scenes. So, I think the appointment of Yellen is going to be very bullish for gold and silver. Unfortunately, the consequences of that bullishness are not going to be good for the general health of of our country and our economic system. Right. So that's one of the reasons I think gold's going a lot higher. I mean, the fundamentals that support higher prices for gold and silver just keep getting stronger every day. And her appointment to the Treasury Department as head of the Treasury Department is one of those key fundamental ingredients that I think is going to act like a rocket booster on gold and silver.
Yeah, it's extraordinary, the huge amount of money that they expect to be printing. I mean, every time people hear about these huge programs and these stimulus packages and the Green New Deal and all this stuff, and it's going to be funded by this, and this, that's all printing of our money, and probably double printing. Because I'm thinking, oh, we need $1 trillion. Okay, we'll print 2. Give us one of them, and we have no idea where all this stuff goes.
If you need $2 trillion, you only need to print $1 trillion, because then the bonds that the Fed buys can be lent to the banks, who can then use that as collateral, and it spends just like cash. So essentially, every dollar that's printed creates $2 in effect. So
and it's so ridiculous. The American people, we owe trillions and trillions and trillions, and we're apparently printing off trillions and trillions and trillions, but we have none of it. I wouldn't be so unhappy if I didn't have it. If I had one of those trillions, I'd be okay.
Well, a lot of those, a portion of the trillions that are being printed goes right into, billionaire financial operator bank accounts.
Yeah.
I mean, the transfer of wealth since the Fed started printing money has just been incredible. When you think about it, our system is a giant Ponzi scheme, because the Treasury issues more bonds, the Fed prints more money, buys those bonds. I mean, I think the Fed owns something like, I want to say 70% of all of the 10-year treasuries issued and outstanding. I mean, it's absurd.
It is absurd. It's like,
it's a Ponzi. It's a giant Ponzi scheme. That's what modern monetary theory is. It's a Ponzi scheme.
Put that in a nutshell. I'm sure it's much more complicated than what you could go into right now. But what exactly is the equation there? The Fed prints the bonds, the prints the money.
I mean, the perfectionists are going to wince at this oversimplification of what it is. But essentially, the idea is that the government can spend as much money as it wants, and the Fed can print money to fund that spending, as long as the cash kind of circulates internally within the financial system. And I guess the idea is that it can go on in perpetuity, but I don't think that's the case. So, I mean, the fact that the dollar's already dropped from 100 down, I mean, it was in the high 80s. I mean, it's dropped quite a bit in the last year. That is your evidence of the effect of the money printing on the value of the dollar, is the fact that the dollar's declined so much, and it's declined against the yuan, the Chinese yuan. It's declined against the euro. It's declined against the Canadian dollar. It's declined against the yen. So and those are and I haven't looked at versus the pound. It's probably down versus the pound. Those are your major currencies that are in the dollar index basket. So, whether or not the money that's printed stays contained within the financial system or somehow on the Fed's balance sheet in the form of excess reserves, and that's irrelevant, because the market still knows that money is there, and it's direct devaluation of the dollar.
Yeah. Well, the thought is that we are going to have this great reset that everyone's talking about, because they're obviously, the thing seems to be is, I am going to file for bankruptcy, so let me get a bazillion credit cards and buy everything that I can, because I'm just going to wipe it away anyway, and somebody else is going to pay for it, which means they're getting all the money, everything they can buy with it, and the American people are going to be paying for it, stuck with the bill. But then, oh no, we're going to change the whole monetary system, so you're free of the bill that we bought everything with. It's just so absurd. Bought the media and all of our athletic teams and Hollywood and just banking, and they own such a small group of people that are printing this money. This is what blows my mind, Dave. This equation of like, I'm going to give you a money machine so you can just print off a bunch of money and buy whatever you want and put it on my bill. You know, right? Which is what it is. It's like, who said yes to this? Right? How did this happen, in your opinion?
It's happened throughout history. I mean, was the downfall, part of the downfall of Rome. Rome was originally a precious metals, gold and silver based monetary and banking system. And then it went into fractional banking, which, that says that for every dollar the bank has, it can lend out several dollars. And then it started diluting the value of its coins. And it basically, essentially what we're seeing now is old wine in a new bottle. It's just, how about the Weimar period in Germany? I mean, it's the same thing. They started really running the printing presses, I want to say in 1913 or 1914, and they had to keep printing more and more and more. Eventually, they went parabolic with the printing press. The stock market did what our stock market's doing right now, and then the currency collapsed completely. So people who didn't own any gold and silver back then, who were Germans and part of that system, were completely broke. It didn't matter how much cash they had in the bank the night before the mark was revalued. They had 1/1 billionth of the amount of cash they had in the bank the next day. It's November 1923.
Wow.
And I think, that's what we saw it in Zimbabwe. We've seen it in South American countries, and we're seeing it now in, the world's empire that I believe is in a state of collapse. And as it collapses, the people in power get even more desperate to hold it up. And so they have to do the things that we're seeing now. We're seeing a more totalitarian control of the government. It doesn't matter which party affiliation. It's all like clamping down on the control, the legal control of the population, taking away our constitutional rights. You're seeing the market go haywire. You're seeing things like GameStop and Tesla and a lot of other of these nonsense stocks that are going straight up. I mean, even on a day like today, where the Dow's been down well over 400 points at certain points this morning. So to me, those are all signs of a collapsing system. And you're seeing that in reflected in the desperation of the political and business elite. And they're the ones who make the decision that, we have to print a lot more money to keep this thing going. And all it's doing is deferring doomsday.
My fear is doomsday is going to come overnight one night.
That's how it happened in Weimar, Germany. It happened overnight. The revaluation of the mark. They canceled the mark, and I think it was replaced with something called the Renton mark or something like that.
And what was the effect? I mean, people went to bed one night, everything's normal. You wake up the next morning, and what's the change?
I mean, you're all of a sudden you go from having a sustainable lifestyle or being wealthy to being highly impoverished. Because
food is incredibly expensive and things like that. Is that what you're saying?
Right. That's right. Because you had so much currency relative to the amount of goods that were being produced and available to purchase with that currency. So that's what created the price inflation effect. It was the hyperinflation of the currency. And we've seen that here. They just hide it because they don't report the rate of inflation honestly with the CPI. I mean, if you look at a real measure of a basket of goods that people have to buy, on a daily basis, the rate of inflation has been more like between 10 and 12%, depending on what city you live in, for the last 5 years.
Well, let's go back to investing and what people should hold and protect themselves. We know physical metals are at the top of your list. What all is on the list, and what is the most important thing for investors to keep in mind right now?
Well, that's a good question. I mean, for me, items 1 through 5 on the list are gold and silver, gold and silver, gold and silver, gold and silver. gold and silver. So, I mean, after that, I think if you're in a financial position to do so, you probably want to go and find some farmland and buy that. That'll hold its value in a doomsday scenario. I don't really know. I mean, I think it's important to own as few dollars as possible. And I mean, that's a really uncomfortable thing for people to contemplate, because I mean, for several generations now, we've been, brainwashed into equating the paper dollars in our pocket or the digital dollars in our bank account as money. And it's really not. It's a currency. It's a fiat currency, meaning it only has value because the government forces you to use dollars for your transactions. So I think the important thing to keep in mind about owning gold and silver, and I mean, I try and put as much of my loose cash as possible into gold and silver. So because I know at some point, I mean, what's the point of owning dollars if I think they're going to go down in value considerably? And that's what you're seeing when the price of gold goes from $35 in 1971 to it was almost $2,100 in the summer of 2020. That's not the price of gold rising per se. That's the devaluation of the dollars. That's the increase in the number of dollars that it takes to buy an ounce of gold. So think of the ounce of gold as having a fixed value, and it takes more and more dollars to buy an ounce of gold, because at the end of the day, and this is in the DNA of humanity, and it has been for 6,000 years, gold and silver are real money. And ultimately, at least all throughout history up to now, the world has typically, it's occasional periods it's gone off of a gold standard, and then it comes right back to it because the fiat currencies never work out. It's like Voltaire says, fiat currencies always return to their intrinsic value, which is zero. It's kind of a brute paraphrase of what he said, but so honestly, I mean, you're holding gold and silver. It's like insurance. I mean, would you own a house without having fire insurance? Homeowners insurance? I mean, you might if you don't have a mortgage on it, and if you have a mortgage on it, the bank requires it. But you're looking at you're holding it as an insurance policy against a tail event, right? A 2 or 3 sigma event, a black swan that's going to happen. And we're getting closer to that black swan hitting. So I want that insurance policy to protect the value of my wealth when that black swan appears, and all of a sudden, we have a systemic reset, because gold and silver should and probably will hold their value throughout it.
Now, the systemic reset itself, describe that to us.
I have no idea what that's going to look like. I mean, it's anyone's guess. I mean, I think at some point, pardon me?
Everyone hears about it over and over and over again. The reset's coming, but no one really says what it entails. Everybody kind of, the reset, okay. But what does this mean?
I just hope it doesn't entail some type of global military conflict before the actual reset happens. I mean, that's really what you see throughout history, is that in times of economic collapse, that's when the wars break out. So I don't know what it's going to look like. I mean, I don't even know if there's, say, an organization or a body of people out there, like, people seem to think there are, that are trying to shape what the reset will look like. I don't even know that they can tell you for sure what it's going to look like. I mean, I think they can tell you what they hope it looks like, but I think a big part of it will be something that erases all of the debt that's out there, but there's going to have to be a big price to pay for that. And I think it's going to involve, like I said, reincorporating gold and silver into the global monetary system.
How long do you think we have before it happens? Because I mean, the writing's on the wall. They're making it so obvious to anyone that has a clue, that when you print billions and trillions, week after week and month after month of fiat currency that has nothing behind it, it's going to collapse to zero. And anyone that's even, we mentioned Venezuela all of the time, they dropped from wealthy to, feeding their family out of garbage cans in 6 years. It was so fast. And, Americans can't even imagine that happening to them. They just think that that's some foreign country it happens to. Just like people that walk around, talking about the Constitution doesn't matter and free speech doesn't matter and let's take away all the guns. And they have no appreciation for the formation of their country that's created the type of lifestyle that they live. And they just don't believe that they could ever lose it.
Well, I mean, it's the boiled frog syndrome, right? I mean, it's you put a frog in a pot of water and slowly heat it up. The frog doesn't realize that the water's getting hot until all of a sudden it's boiling and the frog is dead.
Yeah.
And that's kind of, what we're experiencing here. And it's, I would say that the pot was on the stove before 1971 when Nixon unbacked the dollar from gold. And that was just supposed to be temporary. If you go back and study the situation, he said it was only temporary. Well, now we're what, 50 years temporary? Is that I guess on, the geologic time clock, 50 years is temporary, right? It's a nanosecond. So, but essentially it was 1971 when the burner was turned on and they started heating up the water. And so, is the water boiling right now? I don't know if it's boiling, but I think it's getting pretty close to starting to boil.
Yeah.
And again, I think that your indicator of that is kind of the extreme volatility that we're seeing throughout society. You're seeing extreme volatility in the stock market, extreme political and social behavior, which, I would label as volatility, social and political volatility. Obviously, what we've gone through the last 3 months, I would call highly volatile political environment. So water in the pot's getting ready to boil. And I mean, in my opinion, the best way to prepare for that is to own as much physical gold and silver as you can. And that, who knows, that may or may not work. You end up with a totalitarian system and they outlaw gold and silver and they issue a new currency, that they control tightly and they distribute it, sparingly or tightly. One of the things that's been banning about is this idea of a universal income. Well, to me, if you're going to have a system where you implement a universal income, it also means your government's got pretty tight totalitarian control over the system. So, I don't know. It's going to be interesting to watch this unfold.
This has just been such a crazy time, which everybody knows. Now, I want to touch on something just before we go, which is the junior miners sector. I know it can be incredibly volatile, but it also can be very profitable. And I want to get your thoughts on what it's going to look like throughout 2021.
Well, first and foremost, it's going to be 100% dependent on what happens with the price of gold and silver. Now, like I said earlier, in my opinion, price of gold and silver is going to go higher this year. How high, I don't know. No one knows. So to that extent, and assuming there's some sort of stability in the stock market, because, if we have another stock market event like we had in that started in mid-February and went to mid-March, I mean, every stock's going to go down. But then the question is, what's the best thing to buy to take advantage of that? And I haven't run the numbers recently, but through the end of the year, a portfolio of junior mining stocks outperformed a portfolio of anything else, except maybe if you owned a handful of these idiot stocks. So as long as the price of gold and silver go higher and the market is stable, whether it's, at the current level or a lower level, I expect the junior mining stocks, especially because the sector's been in a pullback since, I don't know, I'd have to look at the chart again, but just call it September, maybe late August. And so relative to where these junior mining stocks were trading at in early August, the end of July, a lot of them are, nothing's changed fundamentally with them. In some cases, several of the companies have produced positive news, positive drill results, other types of positive developments. So at this point, I mean, the junior mining stocks look like they're probably pretty good value right now. But again, that depends on, the other correlative factors in the market that are part of the, ingredients for pushing junior mining stocks higher. Mm-hmm. Right. So, I mean, I think if you're thinking about taking dipping your toe in the water, now's as good a time as any. But, I always tell my subscribers, leave plenty of cash on the sidelines in case the market goes even lower and you still feel good about your outlook for the sector, because then you can, add more shares at a lower price level. And if the market takes off on you, at least you've got some exposure to the stocks.
Right. Now, going back to cash just for a moment, even though obviously holding fiat is not the best type of investment, but how much cash do you allocate portfolio-wise to hold on to just in case that opportunity hits where, the junior mining stocks drop and then start to rocket or something similar?
I don't have a scientific formula. I just, as I get cash that I don't need to pay bills or, take a vacation, I'll buy more physical gold and silver, and I'll add a little bit to my mining stock holdings.
Ah, okay. So you just keep everything, because you can always, if you want to take advantage of the mining stock, you can also cash in some silver or gold.
You can do that, yeah.
Right.
It's also, people don't realize this, but gold and silver are extremely liquid. I mean, you can take an ounce of gold to any local coin shop and they'll buy it from you. They'll pay you cash for it.
Right. So hold your fiat not. Right?
I like it.
Dave, this has been an amazing interview. Please tell everyone about all of your publications and your investment funds and how everyone can follow your work.
Sure. So my website's Investment Research Dynamics, and it's investmentresearchdynamics.com. And at the top of the website, there's a link to my mining stock journal and my short sellers journal. And if you click on that, it'll go through all the details for each newsletter and what's involved and what the cost is. And then I have it's a small physical gold and silver bullion and mining stock fund that is available for accredited investors and above that. So
exciting stuff.
I mean, it's a private fund. It's not, you
right.
can't access it, in the public markets.
Yeah. It's just, you have so much stuff. The way you're speaking it right now, you're sort of, I've got this. But if you guys look him up and you follow his work, you have incredible insights, and you put them out like every week. It's a very fluid situation we have right now, isn't it? And it's probably going to stay that way throughout the year.
Yeah, absolutely. I actually, believe it or not, even though I've been doing the precious metal sector for 20 years now, a little over 20 years, I actually enjoy writing my short sellers journal more than I do the mining stock journal.
Really?
Yeah, I mean, I have to search far and wide for ideas, and I spend a lot of time every day looking at economic data, not the crap that CNBC reports, but real hard economic numbers. And so it just, it's a little more intellectually challenging than the mining stock journal. I think, but that said, I do think that right now, investing in precious metals and maybe mining stocks, depending on what happens with the stock market, is probably the biggest no-brainer trade I've ever seen.
Beautiful. Beautiful. Invest in fiat not, your new slogan. Thank you so much for coming on this show today.
Thanks, Michelle.
We will bring you back very soon as this continues to change. Mr. Dave Kranzler, precious metals expert, fund manager, editor of Mining Stocks Journal, and the founder of Investment Research Dynamics. For the Industry Experts Panel, I'm Michelle Holliday at PortfolioWealthGlobal.com.